Hello everyone, Jason Derbyshire here for TradeLog software. Today I want to answer the question, what is a wash sale? Many active traders and investors have never heard of wash sales until after they start trading. Some get really worried about wash sales and many are totally confused. So let's break it down as simple as we can. Basically, a wash sale occurs when you sell a security at a loss and within a short period of time replace it. For example, let's say that today I sell 500 shares of Apple and I have a loss of $1,000. Now tomorrow I repurchase 500 shares of Apple. The price that I pay to repurchase is probably pretty close to the sale price today. So essentially I own the same security. However, I've created a loss on my P&L, and this is a wash sale. Why would someone intentionally do this? Well, frankly, it's a little trick that some have tried to use to try to harvest losses and evade capital gains taxes. Let me give you an example of how this might work. Say that this year I've had a total capital gain of $30,000 I've realized from my trading. So, using wash sales, I book losses, offsetting losses, totaling, let's say, $33,000. In reality, I didn't completely lose that money because I replaced the shares I sold almost immediately. So I still have the investment. However, I've created these losses so that now, instead of paying capital gains taxes, I'm actually able to claim a loss of $3,000, which coincidentally is the maximum I can deduct for capital losses each year. Now, if you're getting really excited at this point about this as a tax shelter, it's time that I burst your bubble. Harvesting losses through wash sales is illegal according to the U.S. tax code. Back in 1921, the Revenue Act introduced the IRS wash sale rule, which disallows such losses. Of course, over the decades, canny traders have tried different scenarios to try to get around the rule. For example, some have tried purchasing replacement shares before they actually create the loss. Others have tried purchasing the replacement position in a different account, or maybe even having their spouse or corporation they control replace the position. Others have tried using a contract or an option to buy a security in order to essentially replace the same position. And some have even tried to hide wash sales by replacing the position in their non-taxable IRA account. So the wash sale rule has also evolved over time to cover these scenarios and more, and now it's one of the most complicated of IRS regulations. Here's why it matters to you. In today's electronic trading environment, traders unintentionally create wash sales quite frequently. You're required to account for these and report them, and sometimes they can have negative consequences, so you need to understand the rules and how it affects you. In my next video, I'll explain the IRS wash sale rule. Until then, thanks for watching. Make sure to subscribe to our channel so you can stay up to date on more informative videos on trader topics and using TradeLog software. See you next time.